Hello, hello, and good afternoon, guys. Welcome to an IQ option webinar that I've prepared. My name is Ibrahim. Uh, now, I'm a key account executive here in IQ option. I do see quite a bit of activity here in the chats. I hope everyone can hear me. Let's just get the technical side uh, sorted. Can everyone hear me? Is audio perfectly fine? Visuals, do you see the presentation that I'm about to talk a bit more about? Wonderful, perfect. So let's get this started. Nice. So today I'd like to speak a bit more about a popular and one of the most powerful methods in trading. It's been around for a long time and a lot of people know about it. Now, this is what we're going to be speaking about today. It's identifying a trend and calculating the strengths of that particular trend so that we can identify entry points that can be found with more confidence. This is the subject that we're going to be discussing today, and a few topics in relation of this subject. Let's move on to the other slide. These are the three main topics that we're going to be discussing today. Now, before I get into these three topics and speak more about them, I'd like to give out a quick disclaimer first. Okay, so before I start, I'd like everyone to know that the topics and the examples that I mentioned today are not a guarantee to secure profits. Nothing is a guarantee in the trading world. No one can predict the markets 100% or any future. So my main objective for today would be to teach traders and show whether you know this subject or maybe a few other tips and advice regarding this subject, uh, so that you get a different approach when trading with the trends or reversals. Now, let's begin. Um, I'd like to make sure that everyone is feeling free to write down any questions on chats. I've sorted it out in a way where I can see chats as I'm doing the presentation. So if you've got any questions, any feedback, anything that you'd like us to discuss, if I see many questions, I might leave them towards the end. But if I see a few questions that you guys have, we might go through them as we're doing this presentation. So the agenda today, we'll discuss three main topics. Uh, Trading trend retracements, breakouts, and the currency strength index. Some of you might know what the currency strength index is, but we are going to speak a lot more about it throughout this presentation. Now, these three main topics are the fundamentals and key points on how a trader should analyze a ranging market and how to anticipate reversals. Because yes, you can trade with retracements, but when is that reversal going to come? Are you placing a lot of put positions? Are you placing a lot of call positions and you get carried out from a big reversal that you didn't anticipate? We're going to be speaking about them in more details, and we will look at an extra tool called the currency strength index as well. This tool will tell us how strong the current trend you're trading is. That's why I've implemented in this topic. Now, trading trend retracements. A quick introduction of this is that, and exactly what trading trend retracements are. A retracement is when the price of an asset follows a specific channel. So it should trend within its support and resistance lines without any reversals. So you see a direct uptrend, you're following that channel towards an uptrend with your support and your resistance lines. Now, I'd like to demonstrate a few retracements on the markets and show a few examples on how a ranging market acts. There we go. Now, I got this through from the charts. As you can see, Euro NZD. These three areas that I've tried to circle in blue, I hope everything's clear within this picture so you can read my notations as well. So as you can see, they are clear signs of retracements. It's an obvious downtrend. So the whole group of candlesticks from the first retracement until the last is an obvious downtrend with clear lower highs and lower lows. Now, I am going to explain this concept in the next slide, lower lows, lower highs. And looking at this chart, we can spot a reversal point as well. Now, the most difficult part in trading on retracements is analyzing when a reversal is going to happen. And once you identify the reversal, you then know when to exit or enter another trade. On the first retracement box, you're placing put positions. The majority of those trades will be correct. Why? Because it's a downtrend. You've got more red candlesticks than green candlesticks. So the more put positions, if you were to put a sell option on each and every single candlestick within that box, you would have been profitable. And you drag from the first box until the last retracement box, the majority, if your majority of the trades were put positions, there is a very big chance that you walked out of there with profits. Now, at the circle where I placed the reversal, if you kept putting sell positions, you would have been knocked out of the market. And this is what we're going to try and speak more about, when these reversals will happen, how to look at retracements, and how to break them down in the analogy of what a trend actually is. Now, we're going to speak a bit more about this uptrend and downtrends. Now, it's a breakdown of how we look at the high highs, high lows on an uptrend, and low highs and low lows on a downtrend. So as you can see, an uptrend ranges, we're going to take the left side now, an uptrend ranges with high highs and high lows. What this means is that the next high point of the asset is higher than the previous high point. I hope that makes a bit of sense. So as you were seeing the uptrend, once the trend reaches a new high, it is higher than the previous high. Same goes for the low point of the trend. So as we're progressing up on the uptrend, the current low is higher than the previous low. This is the exact same opposite for downtrends. So when you're looking at uptrends, what's the best position for you to try and enter, like entry points with an uptrend? You want to be looking at entering at high lows. A call position, of course, a buy position. Now, when you're looking at a downtrend, it's the exact opposite. You are looking at entering sell positions at low highs. That's basically it in analyzing a uptrend and a downtrend and breaking them into parts. A few examples. Now, I didn't know how best to explain these few topics that I want to discuss other than examples. So we are going to see a lot of examples today in regards of trading, trend retracement, reversals, and how to use the currency strength index. Now, the following two screenshots, this one and the next one that I'm going to show, will give us examples of how to implement this and when to actually open up positions. In this example, we will look into a regular uptrend. So you can see from where it starts, the first low, and to where it ends, the last low. As we mentioned previously, we are working with high highs and high lows. So once the uptrend is identified, it is best to follow that specific uptrend. So we know during an uptrend, we like to place buy positions more than put positions. So uptrends are buy positions and downtrends are sell positions. We are going to be following that through. Now, in regards to this, as you can see here, I've placed a circle with where you would be entering that buy position on an uptrend. Now, if you were to enter at this point, you've got your weak support line and you've got your strong support line here. So we know that the markets have a chance to hit those levels. Now, as the market, as you've identified your high low and your high, sorry, your high high and your high low, you are going to be following this pattern. As soon as it hits the next low, you place the buy position until it enters the new high high. Now, at this point here, there's a lot of things that you can look into. When to close. So you've entered this position. If you're trading on binary, the expiration time will walk it through. But if you're trading with something like Forex, you have to be waiting for cues within the signal, within the candlesticks. You will close down positions, whether it's hit your resistance line, whether the candlestick formations, a specific formation forms. For example, you see here, we've got quite a few spinning tops. What do spinning tops mean as a candlestick formation? It's irregular patterns that what is said to happen after these spinning tops is it might take an unexpected turn. So looking at these spinning tops, looking at your resistance point, you would know, or at least identify, where the closing position is. Now, these examples are perfect situations. I mean, we're looking at these, we're analyzing these markets that have already happened. But when you're seeing movements that are happening right now and taking action when you don't know the future of the candlesticks, this is what you have to look into. Candlestick formations, resistance support levels, whether you have Fibonacci lines, whether you have anything that is telling you or signaling you, either technical indicators, when markets will reverse. Another quick example, we've talked about an uptrend. I want to speak a bit more about the downtrend. Now, you're seeing a direct downtrend. You've got low highs and low lows. We've said as previous previous slide, we've said that for downtrends, you tend to enter at a low high. So what we've placed here is we placed a sell position right after the high low, the low high. We need to wait for confirmations. So I've seen the market shoot up to my next low high, and I've waited for a few candlesticks later to confirm to me that it is actually going down. You would never place the position placing maybe a sell position here. Whoops. Trading maybe a sell position here would be way too early. We're placing it down here so that we can wait for the confirmation. So that's what we're looking into. Now, as the markets are progressing down, we want to know when to close this market. If this is for a Forex trade, if it's a binary trade, the binary will expire. The binary trade will expire by itself. It can be as well a digital option trade. You never know. But when would you like to sell this position? Now we're getting cues. So here we've got a nice support level. It's touched it twice. It's going for the third time. Now, as the markets are going up, we see a bullish pin bar forming at this level here. Now, a bullish pin bar notifies and tells us that the markets should start heading up. As soon as it reaches the next low high, more pin bars are forming. And these pin bars, because we've got a very long wick up top, indicates another downtrend. So you've got two options here. You could have closed this position here, where you had a bullish pin bar. If you wanted to risk this investment to generate more profits, you would wait for a signal here. If you had no bearish pin bars here, you would have closed down this position at this point. So you would have lost a profit of this difference. But if this indicates a future downtrend, you would have closed around here, where your resistance line is. There we go. Now, uh, I hope that was a bit clear in regards to how to analyze and how to look into the um, the trend retracements. Now, what else we're going to look into as well is how to place tools that will help you identify these. Now, in this screenshot, I will explain two methods in how you can follow a trend. The one option you have is setting a moving average. A lot of people now, I placed the 50 moving average here, but the more common ones and the most popular ones would be a moving average of 100. So you've got three. It's a range. I would place a range of a period of 50 until 200. The lower you go, the closer this line is going to stick to movements of the candlesticks. The further away you go, the bigger the data that moving average is going to take in order to form this line. So any range between 50, 100, and 200 is perfectly fine for this moving average. The second option you have is placing trend lines. I mean, you click on your graphical tools on the platform, you've got these options here: line, trend line, horizontal line, vertical line, and Fibonacci lines. Fibonacci lines is a very a good one as well. We can discuss in a later topic. But the most common ones would be trend lines and horizontal lines. Identify the resistance levels and the support levels and click those and drag them on your chart. A few important features that is very important, is very necessary to mention with trading retracements is that you may have heard these words before: swing trading. So trading in terms of of retracements is also called swing trading. So the nice thing about this method is that it can be used for all time frames. Whether you're a short-term trader, whether you're a long-term trader, it should work for you. You're analyzing candlestick patterns. Patterns occur whether you have 1 minute time frame, whether you have 1 day time frame. Okay, so now everything mentioned on retracements is very popular. I mean, there's a lot of professional traders using these techniques. It shouldn't come as something new or something wow to most of these most of your traders. It's something that has been used for a long time, and many discussions are being made in regards to trading trend retracements. So I'd like to speak a bit more about breakouts. People that are trading retracements don't like breakouts, and people that are trading breakouts don't like retracements. So we're going to look into this more in detail, and how we can maybe analyze and read more about it. A reversal normally happens when the trend breaks a consolidation and creates a new trend. So as you've got the channel working for you, it will break that channel, it will confirm that it has broken it, and it will create new levels. So if an asset price breaks a support and resistance line, your pivot reversals, or your Fibonacci level, it is considered to be a potential reversal. Now, this may be a fake breakout, but it can also be a potential reversal. This is why it's very, very important to keep an eye out for those levels as well as candlestick formations. I'll give you a few examples. We're going to get back to the examples now. I believe it's the best way to learn. I can sit here and talk hours and hours about trading breakouts, but if we don't actually see an example, there's nothing we can compare it to. So let's do exactly the same thing. Let's break it down to the fundamental principle of an uptrend and a downtrend in regards to breakouts. As you can see, an uptrend breaks its resistance line. A downtrend breaks its support line. Now, we've sorted out, we've dealt with and placed our graphical tools on this level. You can see clear resistance line, you can see clear support lines. It's following a specific channel, but at some point it broke through the support level. And the next candlestick resisted the support line. So as you can see here, as soon as this red candlestick broke through the support line, the next candlestick shot right back up to this support line and resisted it and shot back down. So after this confirmation, once we have a nice confirmation in regards to this, the next candlestick can be a sell position. Now, if we were to zoom out on this chart, GBP Canadian dollar, I spotted a very, very strong long-term support level at this point. There was nothing between these two levels that indicated a strong support level in which this currency pair would have stopped at this point. So my trade would be a sell position at this candlestick right after the confirmation. I would keep it open until it hit the strong long-term support level. Again, these are just examples. I mean, anything could have happened at this point. You could have entered the market around here, and there might have been a consolidation point through this level. Again, another support level. This would have been maybe another closing position. So you would have entered here, you would have closed at this point as well. The long-term strong support level was at here. So if you were willing to take the risk, you would leave your position open until it hit the strong long-term support level. This is another example of a buy position. Exactly the same. We see two trend lines, support and resistance channels. We see that the candlestick is sticking to this channel. It hits the top side, it starts going down. It hits the downside, it starts going up. Exactly the same over and over again. Now, at some point, this candlestick broke the resistance line. But we still need to, there's no point in opening call positions here. This might be a fake breakout. So there's no point in entering these buy positions at this point. Wait for it. Leave it. Let's see how the markets will react to this. So 3 candlesticks supported. So you can see here, we've waited. We haven't placed any positions. We're waiting for, now, this is the important thing here. It supported our previous resistant trend line. Now, this indicates that a new trend is might possibly about to happen. Now, as we progress, we also see a moving star forming here in regards to the candlesticks. As we see a morning star, we know that that candlestick formation suggests a buy option. Again, we wait for confirmation, open our buy position, and wait for it. Now, in regards to this, again, it depends. Are you trading binary? Are you trading digital? Are you trading Forex? Forex, you would leave a stop loss level. Maybe leave a stop loss level at a support line, a weak support line, maybe somewhere around here, or maybe around here. So you've got all this space in which the markets could go down to as a risk management. A few important features when you're trading reversals. The key principle that you're going to be looking into when you're trading reversals is volatility. It is much more important than volume, especially for Forex. Now, considering if you're only trading Forex, we are looking into this. If you're trading stocks, volume is very important. But the reason I say this is because volume is nearly impossible to measure for currency pairs. We don't have a control system to count up all of the transactions for Forex or currency pairs. There's no one single system in which we can go to and say, oh, there was a transaction of this much for USD to Euro. There's nothing like this that we can look into. Now, going back to volatility, most traders trade on high volatility pairs and tend to open positions against the market. I've seen this happen many and many times. We need to avoid this. You need to focus more on using volatility to your advantage. So as soon as you see a breakout, placing a different direction and trading against the markets isn't the best way in predicting and trying to look into them more in detail. It is important to try and not follow the big group of buyers or sellers. So if you see millions and millions of people placing call positions on Euro USD, don't follow. Don't follow the herd. Stay back, look into what is happening on the markets, trade on the pairs with moderate volatility, and apply the methods that we've discussed previously to try and predict reversals. Don't follow other people's trades. Try to create your own signals, look into the markets in depth, and then make your decision. Now, we've covered breakouts, we've covered retracements. The third topic I'd like to look into is currency strength index. Some people may be familiar with this tool, and others not so much. As we're moving in the third topic, this is the tool that will help traders understand which pairs to focus on. So we know how to place your support lines, we know how to place our resistance lines, but what currency pair do we trade? You would apply what we previously discussed into this currency strength index in regards to what this tool will be telling us about this currency pair. Now, most of you already know how to trade reversals, how to trade retracements, and you've tried it at some point. But why doesn't it work? The main reason as why it doesn't work is because it's really not that simple. It's not as simple as placing a support resistant level and trading on those breakouts or those consolidations and walking away at the end of the day with lots of profits. It doesn't really work like that, unfortunately. Now, we need to figure out which currency is not strong enough and compare it to a strong currency that we can figure out if the trend will last or if it's weak. So if I were to give you this information, so if you were to implement whatever we discussed in retracements and reversals, and I was to give you, look, trade this currency pair. It's pretty strong and it has a high possibility that it will stick to the trend that is currently at. Then you would know which currency to implement these features. As a general rule of thumb, strong currency, a currency pair, is high demand for that currency. If you have a high demand for that currency, a higher exchange rate is generated. So this is the information that we're waiting on. This is the information that we need. The currency strength index looks something like this. You can find many versions on the internet on how a currency strength index looks like. The majority of them are like this. Some other currency strength index are with notated with numbers. You can find a lot of versions, but they work exactly the same. Now we have our base currencies. As you can see here, AUD, Canadian, CHF, Euro, and it goes on. These are our base currencies. Anything fallen under the blue, so anything below, is lower in value compared to the base currency. So GBP is weak in accordance to AUD. GBP is weak in accordance to NZD. Anything above these base currencies and are notated in red, most of the time in red. Now, these indicators do change. They depending on what indicator you're working with, may have a different color, may have different notations. The red means that it has gained higher in value compared to the base currency. So NZD is stronger in relation to GBP. Now, this is formed throughout a time frame. Okay, you can get these indicators live. So it shows you the direct movement of the currency. You can get this throughout a period. You change these systems. You change these periods. To break it down more in detail, uh, I've added these notations so that we can break this up even more. Okay, now GBP AUD is a downtrend. How did I find that out? How did I find that GBP and AUD is a downtrend? This is only because of this currency strength index. So let's go to AUD, our base currency. Go all the way down, GBP. Now, GBP is weak compared to AUD. So a downtrend is formed. GBP goes down, AUD either stays the same or up, depending on what news events or technical analysis we've got for AUD. But we've got this to look into. AUD NZD. Let's go to the currency strength index, AUD NZD. Neutral. Why did I put neutral? It's not a dark red. It's not something that indicates and shows something strong. Let's go to the following one. NZD Canadian. Let's go to our Canadian base and let's go to NZD. Now, when we're looking at NZD, it is much stronger than Canadian, according to this strength index. So you've got an uptrend. And this just keeps going. This is how I broke down the currency strength index and analyzing these. Let's look at live examples of this. Now, GBP Canadian dollar. Now, the strength index at this point, and let's point it out because I really want to make everyone aware of this currency strength index. It can be a very strong tool to use. GBP Canadian. Let's have a look. There we go. GBP in accordance to Canadian. It doesn't have a very strong color, blue color, but we still know the GBP is weaker than Canadian, not by a lot. Now, the circle that I've done here shows the period that I've chosen for my currency strength index. I think it was a 1-day period, and this was the day. So these candlesticks represent 1 day. So the currency strength index shows strong downtrend for this period. And after box is what happened a day later. There we go. It did let us know that it's a downtrend. And the day after, it showed a very, very strong downtrend. Another example of this, Euro NZD. Now, when we're looking at Euro, let's go back to the currency strength index, the gray one, the base currencies. Go all the way up. It's a very strong, NZD is very strong in comparison to Euro. Let's go all the way down. The currency strength index shows strong downtrend for this period. So after the box is what happened to the markets a day later. Knowing that it was a strong downtrend, we can say that it will keep going down and follow through with the two methods we've mentioned earlier. Again, these boxes, just as a quick reminder, these boxes are for the day that I've chosen, the period that I've chosen to simulate my currency strength index. NZD USD. Let's go to our currency strength index. USD. There we go. NZD is strong, not very strong, but formidably stronger than USD. So we can see an uptrend in the box. Now, as we've mentioned before, the currency strength index shows a weak uptrend for this currency pair. The box shows the period of which was taken to produce this strength index, exactly what we mentioned. So after the box is what happened a day later. As it was a weak uptrend, we can see here it wasn't very, very red. So as it was a weak uptrend, it followed up with the trend, however. So you can see the uptrend forming, but it steadily declined as the next day progressed. Perfect. Now, to basically summarize these three topics and put it all down to a single question: when to enter a market. Now, these few bullet points is what I look into when observing and analyzing a market. So currency strength index, the currency pairs, sorry, that are medium to high correlation in the currency strength index should be taken into consideration. Not very bright red or blue, but sorry, bright red or blue, or slightly bright red or blue. The moving averages to be signaling a clear entry. This is what we need. We need tools to look into that will signal us to either enter or exit the markets. Another bullet point: candlesticks to be close to the high period moving average. So if it's touching the moving average of, let's say, period of 50, 100, or 200, either it's broken down. If the candlesticks are above that moving average, it's an uptrend. If the candlesticks are below that moving average, it's a downtrend. So you're looking into how the candlesticks will create and form so that you can take decisions upon that. You always have to check for candlestick formations as well, whether it's an engulfing, whether it's a pin bar, a hammer, spinning tops. These are very important as well. I might look into creating another topic solely for candlestick formations, because it is good just to have them at the back of your mind as you're trading with either technical indicators, fundamentals. Knowing the candlestick formations may help you to make better decisions in entering the market. You have to enter buy positions on a higher low and open sell positions at a lower high. In regards to this, if you're going to enter that position and you're trading Forex, your buy position stop loss should be slightly below the previous low, the previous higher low. And if you're selling a position, your stop loss should be slightly above the previous lower high. There we go. Again, this is a full depiction of what we spoke about, what you should be looking into with a live example in regards to this. Number one, you open up the first step. You open up a currency strength index. Once you've opened up a currency strength index, look for moderate to high pairs in association to this. Your second point is moving average. You place your moving average and you should show a clear downtrend with candlesticks getting very close but retracing. As you can see here, it's getting very close to the candlesticks, going back down, very close to the candles, very close to the moving average, sorry, and then retracing back down. Third point, apply trend lines using graphical tools to clearly show the pattern. We've placed two trend lines here. It gives me an exact idea of what price the markets will reach and what price the markets will stop at. The fourth step is the sell opportunities are at lower highs, as we mentioned before. You place your positions at this point, wait for the confirmation, it clicks, it hits your resistance line, it goes back down, wait for your confirmation, candlestick formations, let it go all the way down, back up. You can either sell that position here or wait for it. See what happens at this point. This would be another sell opportunity. Let it hit your support line, resistance line, another sell opportunity. Lower highs, we open our sell opportunities. Now, I just created a quick table in regards to this to show the quick differences in retracements and reversals. You can take a bit of time to read through this. Now, this is just as general knowledge. I mean, let's look at them very, very quickly. The factor that is being affected is volume. How is volume being affected with retracements? Small block of traders, retail traders are selling and buying. This is what keeps the retracements stable. When a reversal happens, however, there's a large block of traders getting involved, either institutional traders. They're selling en masse or buying in mass. This is what creates and generates reversals most of the time. Market flow. The market flow for retracement, it excites it interests buying during a decline. And it has an interest in selling during an increase in the markets. So as markets go up, what do retail traders do? They try to close down their positions. They try to sell their shares. This is how the market flow acts for retracements. With reversals, however, it happens much, much less often and can be abrupt when it happens. So as soon as it hit the limit, it will shoot and be very, very abrupt. The fundamental analysis for retracements, there hardly are any in regards to this. A fundamental analysis will not generate a retracement. It can, however, generate a reversal. It'll push the markets up, it'll push the markets down due to uncertainty and what's happening with that specific news. Quick movements in regards to retracements. It occurs often after large gains in the markets. So as soon as you see a big change, a big gain, that's what you're going to be looking into. The quick movements for reversals can happen at any time. They can be apparent at any point. Candlesticks, now with observing this retracements, the candlesticks tend to form long top and bottom wicks, such as spinning tops. I think I've added an example with the spinning top for the retracement section. So looking at the candlestick formations during retracements, candlestick formations such as the spinning top tends to occur. So when you have candlesticks with long top or bottom wicks, it tends to lean that it will follow the retracements. Now, when you're looking at reversals, however, strict and direct reversal candlestick formation occurs, such as the engulfing, soldiers, and many, many other formations that we have. These are the main topics that I wanted to discuss. I did take quite a bit of time for this session. I really do hope that it has helped everything. And a quick summary, to quickly summarize everything that we've said today. Trading on retracements and reversals is frequently used amongst professional traders. A lot of traders that I work with do use these methods, but it is not as simple as throwing a few lines on the charts and just following a single trend. There's a lot of analysis that you have to take into consideration with. Apply the correct support and resistance levels, trade with a moving average that represents the trend, and keep an eye out for the candlestick formations. Now, most importantly, use a tool. The currency strength index, for example, is a very strong tool to use with the trending retracements and reversals. You measure the probability of the currency pair, a specific currency pair, following a specific trend. Now, I would like you to try this method, maybe look into it on your demo account, test it out, see how it works for you. If you guys do have any questions, it was a pretty in-depth session. I didn't spot out any questions within chats, but guys, feel free to contact your account managers. I'm sure they would be more than capable to help you with any questions that you're facing. Uh, in regards to that, this is basically everything that I wanted to discuss with you today. Drop us some feedback, drop us some questions, anything you guys need, we're here for you. And I wish you all a very, very good rest of the week. Thank you.